And so we will come back to the updates in terms of the deltas. Good news is that we have had some higher institutional dark pools pop up on our radar. Alrighty, everybody, what is going on? Welcome back to another CyperX video breakdown. In today's video, we're going to be doing a quick TA update on XRP, Canton coin, and doing the fundamental backdrop and outlook for this week ahead. What to be paying attention to, what levels our institutional software has updated us on to be mindful of. You guys are going to find all that out in today's video breakdown. Before we dive in, I want to kind of just get the brain juices flowing. We are now 18 days into 2026. Look back at your investing career, decisions, who you followed, and what went on in 2025, all the hopium, all the hype, all the misinformation. And again, I encourage you guys to really strive to be part of a community guided by seven-figure mentors who have a lot on the line in the crypto and investing and trading space that are really truly here to show you all that this level of accuracy can be achieved. You have to have the right data, you have to have the right tools, and you have to have the right mindset. And I encourage you all to understand that you all watching this video right now can achieve the same level of accuracy that we deliver here at CyperX by tapping in with the information that we provide. No hopium, no hype, no bullish moonboy crap that you're tired of seeing, which I know you guys are, because trust and believe I am as well. Put all that aside this year in 2026 and lock in with us here at CyperX. So with that being said, starting off with this post before we then dive into the fundamentals, we'll get into the updated technical analysis levels to be mindful of, and we'll cut the video there. 2026 is for people who want to block out the influencer noise and lock in. On January 13th, when Canton coin was trading at 15 cents, we warned of a pullback down into 11.5 cents. Today, those targets were met. And here, even though we had buyers defended this dark pool, we did not fully retest it. I am paying attention to the fact that the 50 EMA slightly rests at the 11.5 cent range, right underneath of the 12,257. So if this daily low breaks and sellers do regain control, the first area of interest for bearish targets and possible reaccumulation targets on Canton coin that I'm paying attention to, if we break the 12,257 region, is can we see this 50 moving average on the daily act as a support? That comes in at around the 11.5 cent region. Now we take advantage of discounted opportunities and monitor for further corrections instead of chasing green candles. This is what happens when you stop chasing hype and you start respecting real data. Here at CyperX Research, our mission is simple. Show crypto enthusiasts that accurate technical analysis built on real institutional data can project moves days in advance consistently. No guesswork, no narratives, no influencer noise, just precision, patience, and preparation. If you want different results, you need different tools. And more importantly, a different mindset. Learn the craft, master the charts, and let the data lead your investment decisions. Every dollar cost average investor should have one simple goal: minimize risk and maximizing reward. But that doesn't happen by buying blindly, following hype, or hoping price goes up. It happens with structure, with institutional insights, with timing, and with a real strategy. Dollar cost averaging is very powerful, but only when you understand where value actually sits on the charts. At CyperX, we educate you properly so that way your capital works smarter, your downside is protected, and so your upside is then therefore maximized. Because the best investors don't guess, they execute with precision. So I hope that the level of accuracy that we deliver here for you guys at CyperX, you all have enjoyed. And I hope that it motivates you to understand that this can be achieved. So of course you have the right insights and analytical tools. With that being said, let's dive in. So we will come back to the updates in terms of the deltas. Good news is that we have had some higher institutional dark pools pop up on our radar. Some previous levels that we are paying attention to on Canton coin came in at the highest at around 22 cents. Our institutional software has updated us, and now we are seeing levels come in at around 24 to 27 cents. We'll talk through those levels here in just a second, along with some downside targets to be mindful of. And then taking a look at our XRP analysis section, our institutional scalper has been going headstrong with updating our community on a daily basis, utilizing our institutional software on levels to be mindful of. So we'll get into those today as well. Before we even get into that, let's talk about the fundamental backdrop right here. Reading through our updated report that we have just recently hand typed out for our private community members, like we do every single Asia session. Again, if you guys want access to these detailed reports, keeping you all in the loop with the fundamentals throughout the week and intraday, then head over to CyPRXtrading.com. We'd love to have you on at the team. You guys can actually see up here in the top right corner, some private community members are actively reading this report right now during this recording. So scrolling up to the top and getting the boring stuff out of the way before we jump into the TA. Last week, taking a look back at what took place, we closed with a clear shift towards a mild risk-off environment as multiple global macro headwinds converged at once. Geopolitical tensions surrounding Greenland, renewed tariff threats from the U.S., stronger than expected U.S. economic data pushing back on near-term rate cut expectations, renewed yen intervention fears, and delayed progress on crypto regulation all contributed to a softer investor sentiment. Over the weekend, global markets were hit with fresh geopolitical volatility after President Donald Trump vowed to impose sweeping tariffs on 8 European nations unless the United States is allowed to purchase Greenland. The announcement immediately revived fears of a renewed US EU trade war and sent the euro to a 7-week low during early Asia Pacific trading when the markets opened today. Trump stated that the beginning of February 1st, a 10% import tariff would be applied to goods from Denmark, Norway, Sweden, France, Germany, the Netherlands, Finland, and the United Kingdom. These tariffs would then escalate to 25% on June 1st if no agreement is reached. European leaders swiftly condemned the move, calling it an economic blackmail and warning of coordinated retaliations. European officials signaled that they are prepared to deploy previously unused countermeasures, which is something that we were being very mindful of back in 2025, raising the risk of a full-scale trade confrontation. That would be not good for risk assets if this did unfold. This development comes at a time when markets had largely written off U.S. trade threats as political noise after a relatively calm second half of 2025, following Trump's Liberation Day tariffs earlier on in the year. That complacency has now been challenged. The Greenland dispute is only one of several flashpoints currently driving risk sentiment on our radar. Trump has also floated potential interventions in Iran amidst escalating unrest, while renewed attacks on the Federal Reserve Chair Jerome Powell have also reignited concerns over central bank independency. Against this backdrop, gold still continues to trade near record highs as investors seek protection from policy uncertainty. Geopolitical strategists warn that a renewed US EU trade war combined with pressure on the Federal Reserve's independence could eventually undermine confidence in US policy credibility. This could increase capital repatriation flows into Europe and place pressure on US equity valuations, particularly in the technology sector. Adding to another layer of this complexity, Russia is also closely monitoring developments in Iran, while China remains a central figure in Trump's broader geopolitical strategy. These overlapping tensions are still creating a highly unstable global backdrop where risk sentiment can shift rapidly on headline news. The implications for the US dollar still remain mixed as of time of recording this. While the dollar typically benefits from risk-off flows as a safe haven, Washington's central role in the current geopolitical ruptures could eventually weigh on confidence. This dynamic was visible last spring during the first round of trade escalations. Meanwhile, gold remains near record highs. As I mentioned, the yen is also attracting defensive flows, and global investors are becoming increasingly selective with risk exposure. As for Bitcoin, which is currently trading through the weekend and often acts as a liquid proxy for global risk appetite, remained relatively stable around $95,330. That was, of course, as of time of writing this report, despite the geopolitical noise. This stability in Bitcoin's price and the overall total cryptocurrency market cap for now suggests that crypto investors are not yet pricing in a full-scale risk unwind, but the market still remains highly sensitive to further escalation. From a structural perspective, the total cryptocurrency market cap continues to hold above the latest institutional dark pool support zone at around 2.89 trillion, which we'll go over here in just a second when we jump into the technical analysis aspect of today's video breakdown. As long as buyers remain in control above this level, the broader market retains the technical foundation for a recovery attempt. However, sentiment still remains fragile. Any further escalation in trade tensions, geopolitical conflict, or macro uncertainty could easily reignite downside pressure. Retaliatory measures from Europe or any unexpected developments in the Middle East, particularly involving Iran, Israel, and the US, would likely drive additional demand for safe haven assets to the expense of risk markets like crypto. One of the most important macro catalysts this week is the pending Supreme Court ruling on Trump's use of emergency powers under the International Emergency Economic Powers Act, or the IEPA, to impose tariffs. Recently, Treasury Secretary Scott Bessent stated over the weekend that it is very unlikely that the Supreme Court will overturn Trump's authority, arguing that the court will not want to create more market chaos by dismantling a president's signature economic policy. The ruling could arrive as early as this week, so we will be very attentive to this. A favorable ruling that validates Trump's tariffs authority and removes legal uncertainty could stabilize markets and reduce volatility to the downside. However, a negative ruling or a prolonged legal ambiguity could inject a fresh wave of uncertainty into global markets and trigger a sell-off that is not currently priced in. So we will be very mindful of this week. Another critical risk factor on our radar still remains the Japan currency policy. Last week, Japanese finance officials warned that interventions are still on the table if the yen weakens too aggressively against other major currencies. Any direct intervention could trigger a rapid unwinding of yen carry trades, which is a strategy that has been a major pillar of global risk asset liquidity. A disorderly yen rally could force leveraged positions to unwind across equities and crypto and credit markets, potentially creating a sharp global risk shock. This still remains one of the most important tail risk scenarios on our radar. So that leads us into this week ahead. On the macro side, attention now turns to US economic data. Recent releases have shown inflation running slightly hotter than expected, while labor markets still remain resilient, neither of which supports urgent rate cuts from the Federal Reserve. Some key releases to be mindful of this week, which we will update our private community on a day-to-day basis as these things come out, host private Zoom calls, and talk about the market landscape. You all need to be paying attention to personal income and outlays from October and November, PCE inflation, third quarter GDP, coupled with any revisions, flash S&P Global PMI surveys, pending home sales, University of Michigan consumer sentiment, construction spending, and weekly jobless claims. And again, if you guys don't know how to track any of this stuff or apply it to the market conditions, then you guys can lock in with us here at CyperX because we cover these things on a daily basis. Right now, the forecasts point to a 0.5% increase in the consumer spending and a 0.4% rise in personal income for November. Inflation is also expected to remain sticky and troublesome, while growth data still continues to reflect a strong U.S. economy. Ideally, the markets want to see data that supports rate cut expectations without sparking fears of a recession. A Goldilocks combination of cooling inflation and moderating growth will be the most constructive outcome likely for risk assets. So that leads us to the scenarios this week. If inflation data cools, growth moderates, Fed speakers revive rate cut expectations, trade tensions ease, geopolitical risks de-escalate, and crypto regulation progresses constructively, we could see a strong recovery across digital assets. This environment would likely drive safe haven profit taking and capital rotation back into riskier assets like crypto and renew a push higher across the crypto complex. So with that scenario in mind, let's roll over to the updated levels on Canton, XRP, and the total cryptocurrency market cap. Right now on Canton coin, we have recently, in regards to our latest updates, pulled back into that 11.5 cent range, where right now we are currently finding some support. The question is can the risk backdrop support a risk on environment? And if we can, what does price action look like as we start to revisit these institutional dark pools? So if the sentiment can continue risk on, that means the scenario that we just talked through unfolds and we see inflows back into the total cryptocurrency market cap, i.e. Bitcoin, Ethereum, rolling over into other altcoins. What I would ideally like to see is us to break back above the 12,257 institutional dark pool, see buyers start to trap sellers, and become aggressive enough to start to push back up into the 15,237 institutional level as one bullish scenario. Another bullish scenario that I'm being mindful of is if sellers are not done at these current levels and we see buyers get trapped at the 12,257 and risk sentiment still remains skewed for the beginning of the week to the downside, we could still see some sell pressure and we could see price push down into the 0999, which is a new institutional level on our radar, before we start to see buyers step in, defend, trap sellers, and become aggressive enough to push price back to the upside. These are the first two bullish scenarios that I'm being mindful of on Canton Coin and the first two levels to be mindful of in our immediate vicinity. If at any point in time we do break above the 12,237, next on our radar to the upside is a revisitation of the January 2026 high at the high 17-cent range, coming in briefly at around 18,194 as our next institutional sell dark pool to the upside. If at any point in time we did see a bullish resurgence of optimism in risk assets and an inflow aggressively back into crypto altcoins, then on our radar to the upside for some possible profit taking opportunities, we do have the 21,363 cent psychological level and the 24,055 cent psychological level on our radar for some possible profit taking opportunities for capital reallocation in case of a pullback. As for XRP, right now on XRP, the institutional dark pools are relatively spread out, and XRP's price action has been lacking volume and volatility, in my personal opinion, as of recent. Nonetheless, right now, the most important level that we need to be mindful of on our radar, we have an institutional sell wall sitting at $2.08. So, in light of the bullish scenario number one, if we can see buyers trap sellers and become aggressive, pushing price back above $2.08, then trapping sellers again at $2.08, defending and pushing price, becoming aggressive enough to possibly break above some recent lower highs at around $2.15, maybe then we can make our way back up into the institutional dark pool at $2.27. Another scenario that I'm being mindful of on XRP is if the sentiment continues risk off temporarily, pushing prices lower across the board for crypto as a whole, and we continue to see sellers in control, we could see sellers push price back down into the next institutional buy dark pool at $1.88 before we see buyers step in and defend, trying and making an attempt to buy it where they previously bought from, trapping sellers and becoming aggressive enough to shift price back to the upside. These are the two areas of interest right now in our immediate vicinity on XRP that I'm currently paying attention to. Can we see a sustainable break and hold above $2.08, which will open the door for a revisitation of 227? Or do we start to trail a little bit lower down into $1.88, see buyers step back in and defend? And can they do so if that level comes into fruition? As I mentioned, again, above $2.27 in an extreme risk on mood, sentiment comes flourishing back into risk assets. 256 is on our radar to the upside, and slightly above $2.56, we have another institutional sell dark pool that comes in at $3.07. I'm sure that we will have an update before those levels come into fruition. As for our risk off backdrop, if inflation remains sticky and troublesome, if GDP and consumption stay too strong, labor market data remains resilient this week, Fed speakers that are going to be scattered throughout the week remain hawkish, if rate cuts are pushed further into the future, or if geopolitical tensions escalate and tariff uncertainties deepen, we expect continued either sideways price action or a break below the $2.8 trillion support zone that we just went over. And in that case, further downside would likely materialize as capital rotates into safe haven assets and out of risk. With those scenarios in mind, let's go through some quick TA updates. First, taking a look at Canton Coin. Wrapping this up for you guys with our downside targets. We're going to go down to the 12-hour time frame. A failure to break bullish back above the 12,257 institutional buy dark pool and turn it into support, i.e. something like this. Buyers making an attempt to push above 12,257, sellers regaining control and trapping buyers becoming aggressive enough to keep price suppressed below 12,257 opens the door and a risk off sentiment and environment for a revisitation of the high 9 cent range, coming in at around the 0.999 cent psychological level as our first bearish target. If we cannot see buyers break or poke back above the 12,257, we're likely to start to see sellers aggressively defend at the 12,257 and just continue with the overall downside momentum here. If at any point in time the 0.999 cent psychological level breaks, the next downside targets on our radar on Canton coin, I will throw those out there, come in at around the 0.8237. And below the 0.8237, we have the 0.655 on our radar as well. Those are our downside targets right now on Canton, rolling over to XRP. Mind you, I will personally be accumulating some Canton coin at those lower levels. I just recently bought some at 11.5 cents, taking advantage of the discounted opportunity. I will continue to accumulate more if price goes lower. As for XRP, right now, I'm holding off on buying above $2. As recently, I was able to buy in this accumulation slightly below $1.90. That means on my radar, if sentiment can continue to remain skewed to the downside, and we can keep seeing a continued risk off sentiment, if buyers are unable to break above the $2.08 threshold, sellers become aggressive enough to push price and keep it suppressed back below $2.08. That opens the door for a revisitation of the $1.88 dark pool. Anything below $1.88, I will 110% be buying more XRP. On our radar to the downside underneath $1.88, we do have some institutional dark pools popping up at $1.60. Below $1.60, we have $1.27. And the lowest dark pool on our radar as of the new update comes in at 98 cents. Nothing extensive, nothing overly optimistic or pessimistic, always just keeping you guys in a loop with the immediate targets to be mindful of and pay attention to. You guys now have the fundamental backdrop to be aware of. If you guys want access to these types of reports and these types of analytical tools that we deliver to our private community members on a daily and updated basis, you guys can head over to CyperXtrading.com. You can tap in with us in our private CyperX Discord. We'd love to have you on the team. There's so many great like-minded individuals in this community. There's over 700 private members that are here grinding, learning new things, developing a level of accuracy that is unmatched on the face of this internet. We'd love to see you on the inside in 2026. With that being said, be cognizant, be aware out there. Remember, none of this is financial advice. I'm not telling you guys to go out there and buy either of these two digital assets, not XRP, not Canton coin. Always do your own personal research. With that being said, I will see you guys in the next video update.